BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back, good morning. Let's have a look at everything then, shall we, in a very short space of time. It's Sunday, you don't need to sit around watching this all the time. They're very much the same as what I've been saying since basically Friday, which is that this is your S&P coming down to a 4-hourly 200 exponential, looking for a bounce on that one, and obviously the weekly doing the same thing but on the 20 moving average, so a nice center of the Bollinger Band, pull back into that, a nice bounce. So my expectation is that next week markets are going to resume with their upside movement. Doesn't necessarily mean they're going to make a full recovery, but they are going to do a decent bounce. So I call it the everything bounce, right? We added a few of these everything bounces in the last bear market, everything bounce 1, 2 and 3. So this is, I'm going to class this as a new everything bounce, not a everything bounce part 4, that would be crazy, just an everything bounce, right? So that's pretty much, I wouldn't say guaranteed, but it's a very obvious setup really. And if it does break down, which it might, then that would be very bearish indeed. But statistically, it's more likely to bounce from here based on that 4-hourly and on the weekly. So it's the same as I've been saying since Friday. So let's have a look at Bitcoin now then. Since Bitcoin is also continuing to move up, we've now reached that 200 exponential on the 4-hourly, which is the death cross retest. This is something we've been saying since we came down to this level and started getting this bullish divergence. So again, you know, charts are actually working again, which is nice. You know, they don't have to particularly worry too much about what is going on around the world and halvings and all this sort of stuff. It's, you know, the charts are actually doing what they are supposed to do, which is giving us clues and signals to suggest that there's going to be price action in one way or another, and we've got that. But since we've actually come up to the 200 exponential, which is the death cross retest, now what we've got to see is, you know, is it going to be a rejection from here or is it going to break through? Given the fact that I started with the S&P saying that, you know, the S&P is bullish, you know, pretty bullish to be honest with you. Bullish probably not the right word, but offering up a nice bounce, right? And that markets should, as a result, go green, you know, tomorrow and generally next week. Then that makes you think that already Bitcoin, I suppose, could be used as a leading indicator, almost like a pre-market to the pre-market, since it trades through the weekend. It adds more evidence to the fact that, yeah, it's going to be green, but Bitcoin's already green. And over this weekend, we've done a couple of sort of decent moves, haven't we, really? So from this wick low to where we are right now, we've managed to achieve 10%, which was more or less, you know, towards the top target. The absolute top target is going to be here, 66,500. So yeah, Bitcoin has further to run, even on this bounce, based on the 4-hourly and on the daily. And then if you think about that through association with the S&P, which is positioned to bounce as well, then maybe it does break. We will get really bullish on Bitcoin once it breaks and closes a daily above 66,600, give or take, right? So that's basically it. I know that we all sort of want even more, but we've managed to achieve that bounce. We've hit more or less the target. There is an extended target on the 4-hourly, you know, up to 67,000, which again is only $400 away from the daily's top target. And again, when you're dealing with big numbers like this, on a percentage, it's only really a fraction of a percent difference. So you can call it 67,000, or you can call it 66,600. You can call it whatever you want. But a little bit further upside before like a major rejection. And even if it was a rejection, we'd be looking for a higher low to be formed on the 4-hourly, potentially only really down to 64,000. To get picked up and continue on from there. So it is an interesting setup, I have to say, and it does look like I said, it does look like markets are going to return to their green standard. But that doesn't mean that Bitcoin has to make a new all-time high. It really doesn't. Bitcoin is going to be in a downtrend until it breaks the downtrend itself, which means that we've got to close above 71,000, 72,000 to then get, you know, any chance of a, what we'll call it, you know, a brand new all-time high. I'm not going to rule it out. I'm absolutely not going to rule it out. Just to play devil's advocate, there are other reasons why you might not see that. You know, not just based on the chart, for instance, but other reasons. So obviously, there's still the whole thing going on in the Middle East. That's one thing. The halving's done and dusted now, so that's sort of out the way. So the looming threat of a possible dump is done with all of that. I think the one thing you got to consider, which isn't really, I mean, I don't watch other people, but I've not seen it mentioned on Twitter anywhere. I've not heard anyone talk about it. I think sort of the elephant in the room for me is inflation, right? Inflation is coming back up again. And the higher oil prices go, the more likely we're going to see higher and higher CPIs. Basically, the higher inflation is going to be globally, because obviously it's a futures market. It's a global futures market for oil. So, you know, you can't escape that price, whatever country you live in, whatever currency you hold. So inflation generally globally is going to keep creeping up, provided oil price is going to go up. So it looks like that to me. We're in the 80s now. People thought that that was unrealistic when I was telling people to buy oil down in the lower 70s. And I'm not going to call for $100 a barrel oil, but I am calling it an uptrend where I see it. In fact, might as well have a quick look at it. If you've got nothing else to do on a Sunday, we can have a look at that. So this is your oil price, giant descending triangle. These opportunities around this 200 simple moving average on the weekly, this is where we should have been buying it, and this is where we should have been buying. I was telling everybody buy, 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 buy. And so now we've obviously bought that and sailed it up. We've broken out. We've come down to a retest. It does look like we do want to bounce up. And to be honest, the next target is going to be $92 a barrel and maybe beyond. So this is inflation for you. This is what I would consider to be the most useful and simplest way to try and work out, is inflation going up or is inflation going down? If we saw oil prices break down below that 200 simple moving average, down below at this point now, it would have to be, you know, weekly closures, candle body closures in the lower 70s or obviously below $70, then yeah, I would be pretty confident in saying inflation's a thing of the past. And we can look to actually some more glory days of maybe even, you know, Fed, Bank of England, ECB, everybody's saying, right, we've had enough now. Let's lower those rates. Everybody, take your positions, please. We're going to the moon again. Well, you can't really do that because we wouldn't be able to justify lower rates with rising inflation. In fact, it's quite the opposite. You've got to raise the rates, if anything. So, yeah, it does look like over this year, if we continue with this general vibe on oil, which does look like it's breaking out, to be honest with you, inflation's going up. So I don't see any reason to lower rates with this chart positioned in this way. And that was always supposed to be a thing of this year. We're going to lower the rates. The rates were supposed to be, well, they weren't supposed to be doing anything, but the idea, the market had already tried to price in that rates were going to get lowered in Q1. Well, we're Q2 now, and the way it looks, I don't see any reason to lower the rates now, you know, based on the fact that we're looking at this on a weekly, I don't see that there's going to be any rates lowered anytime soon, unless there's some sort of tragedy that occurs that requires it. Because based on charts, there's no reason to lower those rates. So rates will stay as they are, and charts will move as they choose. You know, but there's no intervention, should we say, from central banks that I can see presented by this oil chart. So that is that. This is this. And what we should be looking for in a nutshell is on the short-term time frames, basically being next week, green for S&P, probably green for crypto as a result of that. And just like we were saying on the Patreon, you know, a lot of these altcoins that we were doing measured moves for on Fridays, last Friday we were saying, look, I'm not joking, they do point to between a 10 to 20% move. Bitcoin's already done a 10% move. I think altcoins are going to continue with their moves, but they are nothing more than death cross retests of their own lower highs. And it's only when the lower high gets sort of invalidated do you start to consider new highs, new local highs, and potentially on some of these charts new all-time highs. being created. So that's basically it. There's nothing much more to say about it than that. The fun will start next week. Well, it'll start tomorrow, really, when we see the reaction on S&P. Hopefully it goes up. If it doesn't, then it would be bad. It would be extremely bad because it's positioned to bounce and it's at a very crucial support. So if that support gets broken, then actually, yeah, we do go to Wreck City. It's not that I'm backing both sides of the race here. I'm not at all. You've got to reflect on the fact that trading isn't about guarantees. I try and put this across all the time. At the moment we have what I would consider to be a relatively decent fix on the fact that we're going to bounce tomorrow for stocks, but it's only 65% likely to do that, which isn't an enormous amount of odds in your favour, but it's better than the opposing view, which is 35%. You know, so if you were shorting, for instance, the S&P, the odds are against you. It's not a good idea. You might be right, but it's not perfect. It's, you know, there's far from a guarantee. But it does look like we're going to get a bounce tomorrow. Right, I'll leave it with you there. There's nothing really to say about this. That is basically it. I think we continue with the green. Watch out for Bitcoin around these levels. A rejection today is perfectly fine because if it's going to move up with its big brother in stocks, that won't happen until stocks open tomorrow, pre-market, and then obviously the US market. So look for the gap on the pre-market tomorrow, between tomorrow morning and tomorrow afternoon when American markets actually officially open. I would expect they open with a gap and a nice bounce, and hopefully that'll take crypto with it. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Please like the video if you have the energy to press that button, and subscribe if you're not already. Take it easy.